Hey guys, it's Market Update. In this video, we're going to look at the rest of this cycle, maybe 12 to 18 months left. All of the macro and more industry specific stuff is just lining up, right? So we're going to go through all of those things and see how that may affect us over the next 12 to 18 months. Because the next 12 to 18 months is the cutting cycle. It's not that rates are going to go from 5 to 3 or 2, which really is a major thing, but it's where we are in the current refinancing cycle that's important, because we're going into the part where rates are going to come down. They're going to have to refinance the debts, and that pushes our assets higher. Bitcoin, crypto. So let's look at that in this video. This is the staging area for the next move, right? Big consolidation. The market is just churning through liquidity here. It's getting a new base, right, for in terms of cost basis. A lot of trade around here, right? It's quiet summertime, but we're just consolidating here. You can see the previous all-time high. It's just so obvious that the market is waiting, right? It's waiting for the extent of cuts, waiting for inflation to come out. They're going to cut anyway. Inflation is going to persist. We know that. That is not the game anymore. The game is being consistent in this asset, which all the stars are lining up for it. If you do trade Bitcoin, check out Bybit down below. You can get the deposit bonus up to $30,000. Click the link, make a deposit. You can get the deposit bonus down in the description. The rate cutting cycle in the States is basically upon us right now. A lot of arguments around when this will happen, the extent of the cuts, how fast they will happen. All of that is irrelevant for our trading positions. We are in the cutting cycle. We're in the refinancing stage, and that means markets are going to do really well, because let's face it, right? We're talking about valuing these assets in the dollar, and the dollar's about to get weaker. Now, weaker dollar, asset prices go up. It's as simple as that. And so this is the trade that we're in, right? Whether it happens in September, they push it out, 50 basis points, 25 basis points, it doesn't matter. There's a big boulder rolling down the hill, and potentially this is going to roll over pretty soon. When that happens, that's the Bitcoin cycle. It's not the interest rate that's the issue. It's the ever weakening of the currency that you're valuing Bitcoin in, right? So that's what we're looking at, right? So this is going to roll over. The Fed are essentially saying September for a cut. They're trying to leak that out into the press. You can see Fundstrat here are suggesting that odds are rising of a 50 basis point cut and not a 25 basis point cut. I think it'll probably be 25 basis points. It doesn't matter, right? So they're going to start cutting. They need to refinance the debt. That must happen. And so weakening of the currency, pushing BTC and other asset prices higher. So 50 basis points or not, it doesn't matter. For where we are right now, we are in a consolidation phase going into that rate cutting cycle. So that's usually the peak of the bull market for BTC. I'll show you that data. It's not the interest rates are down. It's you're in the debasement cycle, right? They're having to refinance, flushing liquidity into markets. So that's good for our assets in terms of the dollar price. You can see here that during this consolidation cycle, these are funding rates in the futures markets pretty low, right? They're not overheated or anything. So we're just in a consolidation phase, and that's really good if you're looking to accumulate BTC, right? Because you're looking ahead 6-12 months for a trade, for an investment, 8 years or more. And I'll get onto that in a second, but the next 6 to 12 months, that's the bull market for BTC, and we're in a consolidation zone. I don't think this is going to last forever, right? Because the time is running out. So this was when BTC was a bit overheated. We've now cooled down a bit, consolidated. We've not really moved much in price. So everything is showing that the market is consolidating here for that next move. This is where we are in the current Bitcoin cycle versus previous Bitcoin cycles on track, right? Maybe towards 2025, you're looking at the end of the cycle, right? The end of the bull market. That would match up with previous cycles. So you have to be aware of that. I think the next 6 to 12 months are good. In 12 months time, I'll probably be suggesting, hey, like, where is this bull market going? Because the next phase is potentially a drawdown again. But for right here, we're in the middle of the bull market, coming into the latter stages. As we break out of that 70K region, I think that's the start of the end. Now, that doesn't mean that that's bad. That's actually where a lot of the price appreciation comes. You can see that. You get really big moves, right? But that's the start of the end for the bull market. So you have to be aware of that. You can see that here more clearly. We are right here in black. We maybe have a year or 18 months left, right? You get these big moves. Everything's shaping up for that again. Rate cutting cycle, the market for BTC and crypto is becoming legitimate, so that money can flow in. Everything's shaping up. We just have to be patient and wait for that. But as we move into that, that's when you have to start thinking about, do you need cash for the bear market that inevitably will come afterwards? Since the start of this year, all of the potential risks around Bitcoin have basically disappeared, right? So the ETFs launched, and it was the most successful ETF launch in history of any financial product. So that's number one. Number two, recently, you've had all political candidates essentially coming out and saying, we need to support the Bitcoin industry and crypto industry, right? So now you've got political will, you've got a lot of holders, you've got the market data now that showed you that the market wants this. So everything is aligned for what I think the Bitcoin trade is, which is the next decade. The next decade is the big trade. Now, if you're looking at the short term, the next 6 to 12 months, that is for making sure that you don't over leverage, you don't get the wrong side of the trade, take a loan out on your house at the very top. All of that you need to be aware of. I think the trade is not blowing up your portfolio, making sure that you can have as much BTC for the next decade, because that's the real trade. This is Michael Saylor's forecast here for the next 21 years, and he's looking at an ARR, annual rate of return, right? Bear, base, and bull, 21%, 29%. Let's take the 25% or so annualized rate of return. Is that possible? Absolutely, I think. If you look at the current CAGR of BTC, this is a 4-year CAGR, right? The 4-year CAGR is 60% annualized. So you're making 60% compounded annualized returns on what you're getting. That's massive. Now, the difference here is that, loads of stuff outperforms Bitcoin short term in cycles. However, none of them have that real fundamental data showing that long-term adoption is coming, right? Politicians talking about it, saying this is a real industry, we have to support this. The weight of all of us owning this, pushing it and making them say that. That's the trade, right? It's the fundamental aspects. It's the biggest, most well-known brand in the world. Everyone knows what Bitcoin is, and you've got the returns. That is the trade for the next decade. So 60% CAGR here, and that's going to be coming down, as you can see. Like, definitely the CAGR is coming down, right? It's totally normal as the asset matures. Time is running out to get these outsized returns because everyone is telling you they love BTC. At the Bitcoin conference, you had a load of institutions, you had Cantor Fitzgerald there. BlackRock are telling you their clients, BlackRock are saying our clients want Bitcoin. So what I'm saying is that the time that we have to get these outsized returns in this asset is coming to a close. And so let's make sure that we get them, because mucking around and, wasting time, these institutions want the BTC. People want the BTC. And so what's going to be happening to the price over time? 60% CAGR. That's good if you own it. It's good if you own Bitcoin. It's not if you don't, because this thing's getting more and more expensive out of our reach when the big players are coming in, right? So the trade is the best trade of our generation, but time is running out. These annual rates of returns are possible, right, if we keep getting this adoption. 21% is not a big rate. The NASDAQ returns 18% a year. So the bear case for Bitcoin at 21%, $3 million a coin, that is possible if we keep getting the adoption. And everyone is telling you that they love it and they want to adopt it. So the trade is here and time is running out for us to get these outsized returns. The Ethereum ETFs have also done very well in the first week, in my opinion. Not as big as the Bitcoin ETFs, but it is a smaller asset. However, we're seeing a very similar setup where the Grayscale Trust, which is converting and has a lot of ETH in that, is converting and people are selling out of that. Now, you may have people selling just to buy the other ETFs because they have cheaper fees, but there are also many investors in the Grayscale Trust who are probably very early stage and probably have rules that they need to sell ETH now because it's not an emerging asset anymore. The ETH ETF is essentially Ethereum's IPO. A lot of funds will sell on the IPO to get liquidity because that's just what the funds do. They invest in early stage. When something IPOs, they sell some of it. So there's many rules around that. I don't really know the mix of what's going on here, but what happened with Bitcoin, you had the selling, that stopped, and then you had the inflows. I suspect that with ETH as well. So we can see here that the ETH outflows are a lot quicker than Bitcoin. So ETH in orange, Bitcoin in blue for some reason, which probably should be the other way around. But in any case, That's just faster outflows. So you're churning through that a lot faster. You can see it took 12 days for Bitcoin to come down off the ETH ETF kind of news and then bounced again. This poster is saying that we've maybe bounced after 3 days. It's too early to tell. Again, it's irrelevant, right? It doesn't matter, because the real thing is, from this interview, BlackRock's saying their clients want Bitcoin and ETH. That's it. They want Bitcoin and ETH, and that's why they're offering them. So new money coming into Bitcoin and ETH over a cycle where we're seeing rate cuts right now. Typically the next 12 to 18 months where prices do really well for this growing asset class. New money coming in, so that growth is assured as well. Now, they also said that other assets aren't going to get ETFs anytime soon. So Solana has been rumored, maybe a couple of others. They said their clients don't want them, they're not going to offer them. That doesn't mean that won't happen in the future, but that is what it is right now. Also, Bitcoin and ETH are massive assets now, right? They're not small. Right? Bitcoin's top 10 asset. Ethereum's 400 billion. It's one of the most expensive assets in the world. So these things aren't going to perform like maybe some other smaller assets can perform in percentage terms. But for me, it's the sweet spot. The sweet spot is Bitcoin and ETH wanted by institutions. If we concentrate on Bitcoin, you've got everyone saying they love it and they want to bring it on, right? You got politicians now saying we want the industry to flourish. We can't, try and push this industry out of the States, which is the important market. You've got other institutions saying we want to bring this on. We love Bitcoin. So you've got the institutions wanting it. You've got the data now that proves that people are buying it. You've got a rate cutting cycle coming. Everything's lining up for a great bull market, right? And we're not anywhere near the end. But the big trade is Bitcoin for the long term, because we've got this asset that everyone agrees is something that they want, but you've still got not all of the flows coming in for it, right? You've still not got the big wirehouses turned on to sell BTC. So I think it's a sweet spot trade, and the excess returns of this amazing asset are not going to be around forever. So we're still in the sweet spot trade for Bitcoin right here, with excess returns that we can get right now that won't be around forever. It is the sweet spot trade of our generation. I can't see anything other than that. If you do trade Bitcoin, you can trade on Bybit with a $30,000 deposit bonus. I'll be putting the crypto investor course price up in a couple of days at the end of this month. So if you want to get in the original price, check the link below. Updated for free for existing users forever as well. So check the link below if you want the details for that. I'm James, this is Money DG. Cheers for watching, and I'll see you in the next one.